Hi, everyone. Welcome to episode 45 of the Future of Work show, where we have conversations with thought leaders from across the world. Uncube, the organization I represent, works in the future of workspace, and what we try and do is work with our clients to help interpret some of the broader trends that are changing the world and their implications for the kinds of organizations we are building. So today I have with me a very, very special guest and someone whom I've been uh, I've been reaching out to for a while. So I'm so delighted that we finally have the opportunity to have this conversation. This is also someone whom I admire greatly. I've had the opportunity to have a couple of one-on-one conversations, and each time I have to say I've gone away completely blown away by the power of ideas that he represents. So, with that, let me welcome Sharad Sharma.
Thank you, Sharad.
Hi, Sharad. So happy to have you on the show finally.
It's my pleasure.
A little bit about Sharad. Sharad is the co founder of iSpirit, which is a voluntary organization that works with actually software technology products and the banking industry. Of all the people I can think of, Sharad actually has the best background to help us understand some of what the future of banking will look like. In fact, almost 7 years ago, Sharad, you worked with SBI in a retreat to help foresee what the future of banking would look like at the time. And of course, in 7 years, so much has changed. So I just can't wait to hear your thoughts around what banking of the future is going to look like.
Absolutely. I think it's very hard to predict what it'll be because it's changing. Things are changing so quickly. But we should talk about what we know and what we don't know. I think both of those would be important. Mm.
Right. So, Sharad, can we start with, first just understanding? I know that in some of our previous conversations, you've spoken a lot about the work that your organization and others have done on setting up the India stack itself. And if you could just help us understand what the India stack really is. You've also spoken about how unique this experiment really is, in the world. So I'd love to hear you, explain what the stack is and what makes it so unique.
Sure. So, so India Stack is a marketing term, or you can say it's a term that defines a collection of things, and that collection essentially includes a number of digital public goods. So I'll give you examples. So eKYC is a digital public good. Many of us have been familiar with DigiLocker because of our, COVID vaccine goes there.
Yeah.
And then e-sign if you're signing, tax returns or legal agreements. It includes UPI, which many people are using today. It includes newer things like the account aggregator, which was launched only on September 2nd of last year, which allows financial data to move from, let's say, the borrower to the lender. And it also includes something called Open Credit Enablement Network. It's a protocol for lending, and I'm sure we'll cover that in more detail. So it is a collection of things, and these collection uh, came about literally one. Our aim was to release something once a year. This is all a public good, so it's not owned by iSpirit, and but it's built or conceived, architected, and sometimes built, and sometimes built. Like in the case of UPI, it was conceived and architected by iSpirit volunteers, but it was actually built and is operated by NPCI. So that's the kind of a sense that is there. There is a story behind this as to why this is important. Uh, you know, uh, you've probably heard this saying by Mark Andreessen of Andreessen Horowitz. He said, "Software is eating the world." Now, software is changing many sectors, and back in 2013 or so, there was a conversation within the volunteers of High Spirit saying, "Hey, we need to fix some of India's hard problems." And so we picked three. We finally shortlisted three. One was financial inclusion, the second was health, and the third was education at that time. And then we said, okay, we'll pick one and see if we can bring a change about. And that one that we picked at that time was financial inclusion. So now, having picked financial inclusion, then the issue was how to bring about change, because financial inclusion has been a conversation that we've been having for the past 70 years. In some sense, that was the reason for nationalization of banks as well. So we have tried many things, and so the question was, what would be different here? And that came from a very simple kind of concept that we need new innovation, and that new innovation, which is usually combinatorial in nature, needs some foundation on which to build on. And that foundation is typically public goods. We don't appreciate it, but that's how it happens even in Silicon Valley. And so that foundation we started building. Some of your viewers can type in Rajni and iSpirit, and you will see a Rajni slide from early 2014. So this is a street vendor, and we've been, in some sense, working to make intraday lending possible for her on the mobile phone. And to make that happen, we needed to build many things that the private innovators could use. Those many things are the ones that I described, and they are now collectively called India Stacks. So that's really what it is. So, uh, so that's the
Yeah.
backstory to that.
In fact, I don't know if
Go
we've
to
ever spoken.
indiastacks.org and you learn more about more of these things as well.
Shraddha, I have to say this, that I think the first time we spoke was probably about 4 or 5 years back,
Mhm.
when you had explained the whole, India stack idea along with the Rajni idea, and the fact that, one day we would be, Rajni and people like her would be able to
Right,
receive money on their phone.
right.
And this was
We're
well
still about
before.
2 years away from that still. But because there's one big piece that has to fall in place as part of this, and that's called the Public Credit Registry. And that's been accepted as an idea, and RBI has actually announced that it will happen, but it is still about 18 months to 2 years away. And so while we're waiting for that to happen, GST paying businesses, and we'll cover that in more detail today, they can actually get that experience. But Rajini will happen, but still about 2 years away. Hmm.
But what I have to say is that I remember when you explained this to me, and this was well before, UPI was,
Yes.
a reality, or any of the other fintech products, Paytm type of products had, sort of been launched. And I remember thinking, I was really curious, how is this going to happen? How is she going to get money on her phone? And today, that's something we just, it's just amazing how in a span of 5 years, that's
Yeah.
something we take for granted. Today, everyone, our local vendors, sabziwalas, everybody takes some form of digital payment. And so it's really amazing to me how far we have moved and how quickly a lot of this change has happened.
Yes. So I think UPI has brought it to life for people, but it's a mixed. From our perspective, uh, uh, we have a love-hate relationship with this success. We love it, of course, for good reasons, because it takes us closer to our ultimate mission. We are kind of missionaries to a cause. You can call us tech missionaries to a cause. And if you go and go to our volunteers.ispirit.in, you'll see we have to be no greed, no glory, right? So we give the greed away to the marketplace and glory to the policymakers. And our learning has been that we can only do this if we are comfortable calling us a bunch of misfits. So we actually, iSpirit is a collection of misfits trying to change the world. So when we are very comfortable when there are people who are skeptics and disbelievers of what is going to happen, that that situation is the comfortable situation for us. And the uncomfortable situation is when that begins to go mainstream, and then we start fretting and saying, oh shit, what should we do, how to now retreat back into the comfortable zone where we're pushing something which is not yet acceptable, and outside the Overton window of what people are willing to accept. So but UPI has brought attention, and people don't appreciate that uh, that India does more digital transactions than China, South Korea, and US put together,
Wow.
right? And I remember not so long ago, I made the mistake. We generally keep a low profile, but I made the mistake of predicting that India will do more transactions than China, and a mocking article appeared in Economic Times. Started on the front page, but most of it was in subsequent pages, saying these guys are smoking pot, essentially saying that. And today, if you see this, let's say Phone Pay, which has about 30% market share in India, does more digital transactions than Alipay, which has more than 55% market share in China.
Wow.
So this is the power of non-linear change. We don't appreciate that, and UPI has been steadily growing at 6 to 8% month on month. And so when you compound that, the numbers become very large over time. And uh, and so we've been through that journey with Aadhaar, with eKYC, e-sign, many of these places. So we live and we for this non-linear kind of a change, and eventually, if you can sustain it for 4 5 years, it adds up. So I mentioned the account aggregator. A good place to read about that is in a trade body called sahamati.org.in. But that was launched on September 2nd, and we've been growing, I think, still at 28% week on week. Now, of
Oh,
course, 28% week on week will slow down. It'll become 20,
sure.
19, 20. But if you can do 5 6% week on week and then 5 6% month on month, in 4 5 years, will be the largest system in the world. So the question is, what does it take? Because you can't, when it's growing so rapidly, you can't tinker with it. If you didn't get it right in the beginning, now it's too late. You've already fired the missile. You can't. You can make minor corrections, but you can't make major corrections. So you have to get it right in the beginning, and that is usually effortful. It takes time, but that's what I think over time India is learning to build for its Bharat market.
Shalin, one of the things which you had mentioned when we spoke last, actually, was the idea that banking was in for a generational shift. And you sort of linked that with the fact that, exponential curves like the kind you just spoke about are so hard for people to, sometimes wrap their heads around, because when change happens, it's, like the UPI, right? It's just the way we sort of work and live these days. But
Right,
that wasn't the case 5 years back, right?
right.
And you spoke about how banking was in for a generational shift, and
Huh.
also the fact that few people seem to really understand what that was going to mean.
Yeah.
So I'd love to understand from you, what are some of the trends that you think are most likely to play out? And perhaps if you indulge me in a thought experiment, if we were in 2050, what would banking look like?
Understand. You know, uh, so yesterday was the International Women's Day, and I want to call out a person who's very special, at least from my perspective, Arundhati Bhattacharya, who was the chairman of SBI. And there was a conversation that took place, and then back in 2015, you referred to it. Uh, she mentioned that she liked to kind of come and understand. We said you have to come to Bangalore. This has been generally our policy, because when they come to Bangalore, then they've already made the effort, and they have more time on their hand. Those regular distractions are not there. So she said, okay, I'll come with 5 6 people. And then as it became closer, 5 6 people became her direct reports. And then eventually it was all 30 people, some 30 people, including two board members, turned up. And so I think at that time, we talked about 6 orbit shifts to her. And this is in 2015. This is when, a year before UPI is launched. And one of those orbit shifts was how payments will change over time. And this is still applicable. Payments used to be, if you went to a bank, uh, you know, quarterly statement, they would usually have and say, hey, we are very grateful. Some of the biggest banks would say, our fee income went up. And if you double clicked on the fee income, the biggest fee is actually coming from the payment system. and UPI takes that all away. And so it's a business model change. It forces change in other parts of the businesses that you are dealing with. And so this is a very major kind of an orbit shift that banks have to deal with. What has happened to UPI in the next 2 years is going to happen for a type of lending which is called cash flow based lending. So there are two types of lending. You see, ultimately, can I spend a few minutes on lending
Please,
here?
please.
It's a
Yeah,
good
yeah.
time. Yeah. So what happens in the case of lending is that lending is about predicting the future. Will the borrower have the ability to repay the loan, and will the borrower have a propensity to repay the loan, right? So the credit score is to generate propensity to pay, so that if you don't pay, there are consequences of not paying, and of course there are other legal consequences. But ability to pay is a function of, let's say, whether you'll still be employed if you're a individual, or how your business is doing. And so that uh, is a basis for determining what your risk will be, and therefore what your interest rate will be. uh, Now, up till now, since we don't do a good job of making that prediction, we actually have an alternate system, which is to say, you give me a collateral and I'll give you a loan. So this is the prevalent system of giving loan in the country today. And that collateral can be a house for a small business or whatever asset that they have. It is also something called emotional collateral. So on paper, it may appear that it is collateral free loan, but the NBFC or the bank may have taken the papers of the property that the borrower has and kept it inside their locker. So now it's officially collateral free, but actually there is, this is called emotional collateral in the industry, right? It's illegal, but it is very, very pervasive. So this is the model. Now the problem in this is that people who have assets are able to get credit. But actually, if India has to prosper, then we have to give credit to the people who don't yet have assets, right? These are the small businesses. These are the informal businesses. They don't have assets, right? They may not be even from business families, right? And unless that segment of entrepreneurs and small business people thrive, we will not have a vibrant economy. We won't have a vibrant India. We won't be able to employ people, because employment is usually created in small firms. So that requires a new type of lending, which is where you use information as collateral. And therefore, the idea there is very simple, that if you know what the cash flow of that business is, then you can at least make a near term prediction whether this business will be solvent 3 or 4 months from now. And will they have an ability to pay? And so today you can generate the cash flow as a lender if you can get the GST information of that business, because then you know how many invoices are outstanding, they are usually not paid, or how many invoices were generated last month, and so on and so forth. And then if you can look at their bank accounts, then you can see for the invoices that were generated, let us say this is the seventh invoice that I have placed on a company, and therefore the previous six invoices were usually paid in full and in 49 days. So I can make a prediction what will happen to the seventh invoice. So if I'm looking at a collection of invoices of the company, I can really predict what the cash flow of the business will be in the next 3 4 months. And if I know that, then I can give a loan, a low interest rate loan, to that business for 3 4 months, and then repeat it, right? Because the cost of repeating it, if it's a digital loan, is very low. So this class of lending is called cash flow lending. And to bring that to life, you need to be able to, essentially, some of the people here on the call may be CAs, they may be offended, but carve CAs out of the picture, because anything that you get from the CA is not reliable, right? So if you can then have a system where the borrower can say, look, I will give instructions, and in the next 1 minute, GST will send you all the relevant data that I want to share with you. And I'll give you instructions that my banks will send you all the relevant data that you need, so that you can assemble a cash flow statement from me, and on that basis decide whether to give a loan. That type of lending, cash flow lending, is the second shift that is happening. And of course, uh, you know um, there's a committee that was set up under UK Sena. It's called the UK Sena Committee on MSMEs, that predicted that it'll be about 20 to 24 lakh crores in the first 5 to 10 years. And then Credit Suisse has a very well regarded analyst. Many of you may know him. His name is Ashish Gupta. He's predicted, he's more conservative, so he said it will be between 15 to 18 lakh crores. But even if it is 15 lakh crores, it is more than twice the size of the retail book that has been created since 2008. So this will, so this is as an opportunity, a very significant opportunity, two times the size. That will happen in half the time, right? But this couldn't have happened until the building blocks that were needed for me to be able to send information, which is why account aggregator is growing at 28% week on week, because the people are, you know, every transfer of information is related to a loan today. And so because it's an underserved market, and so the underserved market, as it opens up, so now the question is, who would be the first movers, or who would be the second movers in this, and we'll come back and talk to that. But coming back to your question, that is the second change. The third change is going to be with savings, with billings, you can think of it. And then there are also changes that are taking place inside the tech infrastructure of the firm. So today, UPI transactions exceed the core banking transactions that used to happen. So core banking is now a system of record, not a system of transactions in a major bank. So how do you now create a transaction layer for yourself in the bank? That becomes important. That's another orbit shift. How do you go from an open API type of a system? How do you look at data, and how do you go from the traditional approach, which is called data lakes and things like that, to the new approach, which is going to be needed, which will be mandatory in PDP, but is optional right now in the bank. So can you prepare for it in advance of it becoming the law? Because sooner or later you'll anyway have to do this, and if you do it in advance, it'll allow you to pursue these other business opportunities that are coming. So there is a radical change that is taking place in front of our eyes. And this is well beyond shallow digitization that many banks have been embracing. That is necessary, but that is not sufficient.
So I'm going to bring you back, Sharad, to that question. I know that predictions are fraught with dangers, but that's
2050.
fine. 2050,
Yeah.
because one of the things is India is also one of the most vibrant powerhouses for fintechs. I think there are 2,100 registered fintechs at this point, and it's growing very fast. Uh, what part of the entire set of services, what role will banks, as the traditional banks, what you see them as playing, and what role do you see fintechs playing? How do you see all of this, the ecosystem itself perhaps changing?
Yeah, I clearly, so one way to think of the bank is that it has been traditionally a collection of identity. If you would normally, bank would give you a statement saying Sharad is this, and you would use it somewhere else. Uh, Payments, savings, and lending. I mean, ultimately, it's a collection of these four things. Uh, Identity in India has been taken away because of the Aadhaar system. Uh, Payments has been in a way decoupled from the rest of the bank because of the UPI system. Um, that is now going to happen to one part of lending, which I just described to you, which is cash flow lending. And sooner or later, uh, the current system that is there, which is related to savings, will also change. So I'll explain what that is. Um, so currently, so let's take some lenders who've been very successful. So when AU Bank was an NBFC, it was a lender that became very successful. Another one that has been very successful like that uh, is uh, is Capital First, and both of these got religion early, and they built viable loan books for themselves. So both were NBFCs, so obviously their cost of capital was higher. So they were then attracted to this idea that they can become a bank. AU became a bank because they got a license. And Capital First essentially acquired IDFC Bank. On paper, it is the other way around, but as everybody knows in the banking industry, it was a reverse kind of acquisition because, and then Vaidyanathan, who built Capital First, became the CEO of the combined entity, which is called IDFC First. Now that's very good for the lending arms because they got CASA accounts, and these CASA accounts give you cheap access to capital, right? So the question now is that this cheap access to capital happens because the people who are putting their savings in the bank would have actually put it elsewhere. They're putting it because they're optimizing it for trust. In their mind, bank is trustworthy. Putting it in a money market mutual fund account is less trustworthy, right? Although a money market mutual fund account will pay you more, but they wouldn't put it there. So, which is why they'll put it, HDFC grew their savings, I think, by a very large margin because they have a trusted brand, right? And they'll give you a much lower interest rate, let's say that IndusInd, right? And which also grew, by the way, because, fewer people know about IndusInd, more people know about SBI and HDFC. So, today, there is a trust arbitrage that is there on the savings side. And that is going to disappear in the next 4 5 years because they'll be highly trusted, high paying, high interest rate paying entities that will emerge. They'll be usually from the fund side. So you will see a mutual fund money market accounts come and attack the CASA. Now, what will enable it? What will enable it is the fact that I can now create a mutual fund folio very, very easily on my phone in less than maybe a minute, right? And if you go back in time, not very long ago, and if all of us have opened a mutual fund folio, there used to be a handful of 30 40 pages that needed to be signed. You needed to give two digital identity or identity proofs, and then the cost of all that was very high. So as that comes down, new players will come in, just like payments saw new players come in, new players will come in on savings. So to answer your question, what we know is that banking will not disappear, famously, as Bill Gates said in his book, but banks as we know it will disappear. So, what our goal has been, and we are criticized for this, so I generally don't say this so openly, but our goal has been to unbundle the banking system so that you reassemble viable banks as you go forward, right? So, unbundle all these four things. So, you can have specialized people doing only one thing, or some people choose to do two things, some people decide to do all four things, but you'll have to reassemble them from scratch. Now, luckily, all this is possible because the regulator buys into this idea. I mean, just a bunch of volunteers couldn't have made this happen. And that credit goes to very thoughtful regulators that we've had. UKIS on the SEBI side, Raghuram Rajan and his successors on the RBI side, who've basically embraced this idea. Why have they embraced this idea? So, why would they buy into this possibility of change on the banking side? And that is a story by itself. And I'll stop here, and if you want me to tell that story, I'll tell that later in the conversation.
Rachel, all that you've said actually, I mean, these are huge shifts. And the fact that you're not even speaking 2050, you're saying in the next 4 5 years, uh, that's tremendous. You also spoke about how you weren't sure how many people really understood how gigantic this shift is going to be. So, if you were speaking to someone, as I'm sure you do every single day, who is with a large established bank, or someone who's thinking of starting a bank now, what would your recommendations be?
See, there is a concept that what happens, and we've seen this recently with COVID as well. We all have we have a lens that we look the world through, right? And that pattern, whatever data comes at us, we shed everything that is contrary to our internal belief, and we just amplify our current pattern, right? So first and foremost is that you have to do something which is called pattern interrupt, right? So there, if you can't interrupt the pattern of thinking that people already have, which is about linear change, leisurely change, then they'll not, you can tell them whatever you want and they will not listen to you, right? So because they'll just keep the parts that amplify this. So pattern interrupt, uh, there are many ways to do that. You know, my way of doing that is shock and awe, which works in some cases, but it doesn't work for many. And sometimes you do this, it's the magician model of seduction, which is also used. So different people in iSpirit use different approaches. But when we are dealing with the industry, we consciously think of pattern interrupt, because if we can't interrupt that pattern of thinking, then things will not change. So one pattern interrupt is, we'll ask them, okay, how many employees that you have? They'll say, we have, I won't mention the bank, but that CEO said, I have 59,000 employees. And we say, okay, we can give you, let's sit down, we'll go to the whiteboard, and we can show it to you that you can do everything that you do in your bank with 5,900 employees, right? So it usually results in a 1 hour conversation on the whiteboard, and that results in the pattern interrupt, right? Because so in some cases it is because of the changes that will happen, how the banks are organized. Some are to do with where the opportunities are. People respond to this either from fear or from greed. Our aim has been generally to explain that India is underserved for financial services, all right? And if we can serve the Bharat segment well, there is another HDFC bank waiting to be created by valuation, right? So our goal is to explain that to people, that there is a, the banking industry, despite all its success, hasn't actually had penetration except in the last few years. So if the eKYC of India stack was not there, the Jandhan accounts would not have been created, because eKYC, old KYC, paper KYC was 40, 50 rupees, eKYC was 2 rupees. So even if the government pushed the bank to do it, they wouldn't have done it, because if it costed them 50 rupees to open a bank account. Similarly, now you've seen that with payments, or what is happening with lending. So we are going through these waves of expansion of financial services. You can see that even with companies like Zerodha. They were able to more than double their customers, and therefore their business during COVID, because the cost of penetration in the Bharat market was very low. So really, our focus is to uh, convince people that there is a very large underserved market on the Bharat side. And that market is not wanting um, a smaller sachet of shampoo that the main market. They actually want more sophisticated services than you actually get in India one. And so it is in some sense more like geo. The consumption, the data consumption of a rural user on Geo is higher than an urban user, because I have the benefit of Wi-Fi all the time. I'm surrounded by home Wi-Fi, office Wi-Fi, so I'm not relying on my operators, mobile service or data service all the time. But that's not true for the rural area. So if you look at that, if you had not planned that, built that into the network, then you couldn't serve the Bharat market at all. So the question is, can you create new geos, but for financial services, and not for the whole package, but for relevant pieces that you can actually, be a significant player and learn. So this is really the map that people have to adopt as they go forward. And if they do, then there are large opportunities. So I think
Sharad,
I
I
don't
think
have a
one of
good
the
answer for 2050 beyond that, frankly. Uh,
I think one of the big challenges, though, is, and I'd love to hear what you think, is that uh, reconceptualizing a bank to this degree, as you are suggesting, is really hard when there is nothing to really go by from the past. So it requires almost sort of a fresh slate, and then build upon that rather than, as all of us do, right? When we start building organizations, we look at successful organizations in the past and, take lessons from there. But what you're suggesting is a very different form of organization itself.
And it's very hard, very hard. So I think it's easy to go as a small startup, let's say capital first, and grow your way into being a larger organization. Or let's say in the tech industry, Cisco was a small company and now has 100,000 plus employees. I'm guessing that is what they have. That journey is a easier journey. It's a well understood journey. You can learn it from many case studies, and it's taught in in MBA schools and stuff like that. The reverse journey of going from a staid, stable, predictable organization to an agile, innovative organization that must deal with a Cambrian explosion of products is very hard. And the closest example that I can come up with is actually Pepsi. And I think what Indra Nui's tenure in Pepsi, very early in the tenure, she realized that sugar drinks is not going to be tenable in the long term, and she decided to build a health portfolio, both of drinks as well as of snacks inside the company. And she stated it like that, right? I mean, and this was not something that was happening in the shadows. This was the public pronouncements of Pepsi. But how do you take a company which once every few years brought out a new sugar drink to now needed to have a portfolio of 150 health drinks? So how do you take a company which made a new product once in 3 years to now making it in once in 30 days, right? And that is a very, very difficult proposition. And in this market, if you don't come up with a Cambrian explosion of loan products, which will be all variations of cash flow lending, then you won't succeed. And that requires a different way of thinking about innovation. It involves having different people who rise to the top and are in the C suite of the bank, right? Because if you don't change the C suite of the bank, and that's always populated by people who are in the tech industry, they're called toner heads. Or maybe I should explain what that is. And then you will, even if the innovation is happening, it will come to die in the C-suite, right? And so you have to make changes at that level. You have to reorganize your company. So it is a very difficult transition. So quick, you know, explanation of toner heads. So as this laptop and many of the things that we are doing, they come from Xerox Park Labs, Palo Alto Research Center. So the mouse was there, VisiVig interface was there, and Xerox never saw this uh, uh, because what had happened is that the copier was starting to succeed, and so therefore their goal was to get a copier in every company, then copier in every floor of every company. And so the people who rose up in Xerox, their only goal was to sell more toner. And so they were called toner heads. So when these toner heads guys came to Park Labs, a wonderful place where all this was cooking, the only lens they were looking is, will a mouse or will a VisiVig computer sell more toners? And the answer is no. So from a toner head's perspective, this innovation was useless, right? So currently the banks are populated with toner heads. They don't fully, even if this innovation was to come from the middle rise to the top, they won't be able to see the value for it. So therefore, a CEO has to rejuggle the team. And because if they don't rejuggle, organ rejection of all new innovation will happen all the time. And then, of course, you have to unleash innovation. So how will that happen? That has to be thought about. And this is an innovation not just about products, but also changing the underlying tech infrastructure of the bank. You have to think about new business models. So clearly, this is a difficult thing to do, and I would rate this in the most difficult management challenges that people have.
I would agree. I would agree because right from the fact that banks are some of the largest, most stable institutions with perhaps the strongest guardrails that have defined the way everyone who's worked in banks for a long time have almost grown up, uh, and then expecting something which is uh, uh, that outside of anything that they have experienced and a completely different skill set, and that to somehow take root and uh, allow the mindset of the entire organization to sort of change that's a very hard challenge. So I'm just going to take a few of the comments.
Sure.
Chandan, hi Chandan. Chandan says traditionally lending decisions are based on two things. First, ability to pay by borrower, which is calculated by our credit score. Second, propensity to pay. We don't have proper methods to decide propensity. When propensity to pay of borrower can't be known or predicted, lender tries to give collateral or loans or assets as collateral. Future of extending loan is cash flow based lending. This is the future. I think Chandan, this is exactly what Sharad spoke about
Yeah,
as
with a
well.
small variation. See, the credit score is not so much about ability to pay, but it's about propensity to pay. It appears, see, in the US and Western world, the two are conflated because they've taught people all 18 years old have the same credit. But by the time they're 28, they have different credit limits. And that's basically also, it's on based on the ability to pay because everybody knows that if they don't repay back, the credit score will go for a shock. So therefore, we think that credit score is about ability to pay. And I understand why Chandan is making that comment. But in India, it is actually about propensity to pay. And and for Chandan's benefit, we have three data sets when we are evaluating a loan. There is a credit bureau data set which tells you the historical, loan, the historical loans that they have taken and whether they paid them back. But the second is your revenue side of the equation, which is now available through GST. And then what has been your incoming payment side of the equation, which is available through the banks. So today, there are almost no lender has underwriting models that rely on all the three. There are some that have two of the three, but nobody has all the three. And so therefore you are now beginning to see very innovative companies coming up because they know big banks are struggling to do this. iSpirit itself to its wave one partners, so we have a system that when you embrace something new and you put everything that you have, it has CEO visibility, then we put you as wave one. We don't charge for it, but that means that if you're working on something new like the account aggregator or like the Oken platform, we will put shoulder to the wheel to help you be successful. So there, since underwriting is so badly broken, iSpirit has made its own underwriting model, open sourced it, and is giving it to the banks because without that they can't start. So the underwriting is archaic in India, and it's archaic in the rest of the world also from the Indian perspective because no other place in the world actually has this large pieces of information available on call, and so nobody else built that. So the hope is that, like, the best treasury management companies are Brazilian because they went through lots of inflation at one time, so managing treasury was very important. So in the top 5 treasury management companies, 3 are Brazilian. Our hope is that amongst the best underwriters of the future Indian companies, 3 of the 5 will be Indian, and they are literally being born in front of our eyes. Some of them inside the bank or lenders, or especially NBFCs, and some outside, and then they are selling their wares to this. But just to prime this, because nothing is available, iSpirit has given away this for free. Of course, all our work is pro bono to our Wave One partners because they are at least making the commitment to that side.
Thanks for clarifying, Sharad. That was actually very insightful. Vijay, hi Vijay, thanks for joining. I liked the generational shift and tech missionaries thing. We work with amazing innovators in fintech and payment space as well. The Gen Next is changing the game. Yeah, absolutely.
Yeah, so that
Sajjan
is,
says,
yeah, I
sorry,
want
go
to
ahead.
take a minute here. See, I
Yeah.
want to encourage everybody to look behind the curtain, right? What so I've been an active angel investor, as you know, and Shekhar Kirani and I uh, have a masterclass on angel investing, which I'm told by Let's Venture is still the most popular masterclass for new angel investors. And in that we hammer home a message, and the message is that if something comes in Times of India or any mainstream paper, it's already too late to focus on it. And I would say this is also true for most people. So you have to train yourself to look behind the curtains. And the sad part is, and this is chiding some of our listeners here, and so forgive me for doing that, is that uh, the central bank to central bank is Bank of International Settlements. It, for a reason, published a paper in December 2015 on the architecture of the Indian financial system and declared it to, not my words, their words, a generational shift and should be followed by everybody in the world. And in one go, essentially, they replaced the open banking of UK with the Indian model. But on the WhatsApp groups for fintech entrepreneurs, they'll still be enamored by what is happening in the UK open banking model. So this unwillingness to look behind the curtain, understand something that is not yet mainstream, which will become mainstream, and understanding whether it is relevant or not, not because of social proof of who is saying what, but by going deeper and understanding the logic and the principles behind it, is something that we have to cultivate. And this is why in UPI, Google Pay and Facebook, WhatsApp saw value in UPI faster than our own entrepreneurs did, right? And even when our own entrepreneurs saw value, phone pay, their original promised VC investors backed off when they decided to do UPI. Now phone pay today is the largest payment company by transactions, unfortunately owned by Walmart. But why? Because that VC that had given them the term sheet decided to take it back. Why? And explicitly why? Because that system doesn't look like anything that we have in the US or in China. Arey bhai, that was the whole idea. And so this unwillingness to look at things from ground up is holding our entrepreneurship, because we are otherwise then only copycat on innovators. And in this market, copycat innovators don't have value. Fast movers don't have value. You have to be an original innovator. So my request would be that please cultivate this ability to be first in, which is no, not go by what is mainstream. That's why one of the most important value in iSpirit is that misfit value. Because if our volunteers are no longer misfits, we will die. The moment you're not a misfit means you're not uncomfortable with something that is not yet fashionable, right? So in this environment, we talked about what kind of a CXO team that we need. But what kind of individual will thrive is an individual who is willing to look behind the curtain and understand what is coming and why is it coming, rather than what is already mainstream.
Thanks, Sharad. But on that note, I want to ask you a little bit about decentralized finance.
Mhm.
And, what do you see as the major trends? Which of these do you think will take root? Is it, you know, there was an article on the Wikipedia page actually of decentralized finance, which said that in 21, almost half of financial scams were in some way linked with decentralized finance because of perhaps uh, the lack of regulation at this point in time. So, what I'd love to understand from you is, do you see what are the major trends in decentralized finance that you see as impacting the way this sector itself will emerge?
Yeah.
And what do you see as some of the roles that regulators are going to play? What's pretty uncharted territory.
Yeah, so I need to introduce a concept, which is why protocols are important to bring this in, and it's a very quick tutorial on decentralized finance. So humor me. Uh, uh, so if I had to, let's say, Shalini, send you 100 rupees before UPI was there, I would have gone to Paytm, debited the my wallet, credited your wallet, and you would have gotten notification from Paytm. The transaction was done. This is called a single party system because both of us were interacting with one party, which is Paytm, right? Now, um, if I have to do this with, let's say today with UPI, I will possibly go to PhonePe, and then PhonePe must have a sponsor bank. It used to be Yes Bank till 5th March 2020, and now has many sponsor banks. And then it has to talk to my debiting bank account. Let's say that's SBI, to your crediting bank account. Let's say that's Axis. Four parties already, and NPCI is the fifth. So the question is, why is a five-party system? Can a five-party system be better than a single-party system in experience, or in reliability, or for that matter, even in cyber security? Because here you can hack any one of the four. Here you have to hack only one, right? So technically, conventional view is that one party is better in all of these three ways. So therefore, why does UPI still outperform? It is because there's something that guides the exchange of the talking that happens for the first 150 milliseconds between these five parties is so robust that it outperforms the single party system, right? And so that is called a protocol. So we live in a world of protocols. So the old model, when I started, I passed out in 82 with my engineering, and I got involved in Unix kernel. So I used email before everybody else, but that was called Unix. That was all great because it, as long as you and I were on Unix, Unix server, it was great. Then to create something that was multi-party, a protocol came that's called SMTP to allow us to see websites. Another protocol came in mid 90s. That came in 82. This came in 95, called HTTP. Then a new protocol came, which is what we are using with StreamYard right now, and that is called Session Initiation Protocol (SIP). All of it uses all another protocol called TCP/IP. P stands for protocol again. So the internet is nothing but four protocols. There's not a man in the middle, but there's a protocol in the middle that mediates the work of everything else. So now what happened was that since we created a man in the middle system with Facebook and Google, people said finance and banks, man in the middle, who is not generally innovating, and is, Wall Street is not popular. So the issue was, can we replace the man in the middle with a protocol in the middle? Now think of it. Payments is always been a single party system. Alipay, WeChat Pay, Visa, MasterCard, Venmo, all are single party system. India replaced it with a man in the middle with a protocol in the middle 5 years ago, almost 6 years ago. So, what DeFi is talking about, replacing the bank as a man in the middle with a protocol, right? So this is really, really what it is. That protocol will be for lending, it will be for ledger information. Now, what is happening is, this makes sense. Of course, it makes sense. And India is at the cutting edge of this. Today, UPI does more transactions than most all the crypto wallet reported transactions put together. Just to put this in perspective. So in India, we don't need friction-free payment. Payments is already gone without man in the middle. Lending is already going without man in the middle with an open protocol. But there are changes that are happening in India that will allow another thing to be replaced. Today, if I want to create trust, let's say between a buyer and a seller, like in the LC process, then you need a man in the middle. That man in the middle is the bank who gives you the LC. That's an escrow model. It's a very expensive model, and therefore we are able to use it only in a few places. When you replace the escrow model, which is man in the middle, with a protocol model of creating trust that does not have to rely on the court system of India and relies only on code, that is the use that it will be called. And if people are interested in learning more of it, that's called Badal, and that is on our blog. So pn.ispirt.in, and that is, I think, the second most recent blog. You can read about it. So this is what India is doing with programmable money that is coming. So today, India is therefore for many people regarded as the epicenter of this. Now, of course, if I say this, nobody will pay attention. But in the blockchain community, I'm sure many of these people who are listening to us and are fans of this are also fans of somebody. His name is Balaji Srinivasan. Now, who's Balaji Srinivasan? He is the CTO, co-founder of Coinbase, the largest crypto company. He was the general partner in Anderson Horowitz, doing all the crypto things. But his view is that the epicenter for this removing man in the middle for finance and replacing it with a protocol is actually the Indian India stack model. So, a couple of days ago, Anil Padmanabhan, who used to be the editor of Mint and then HT, he runs his own Substack, wrote a very cute article. He said, "Thank God for India Stack." He's saying this because of Ukraine, Visa, MasterCard being banned in Russia because of the Ukraine crisis, and we have our own infrastructure. And and Balaji on our WhatsApp group is saying, yeah, I wish people understand it. So he see, this is really the shift that is happening. The man in the middle for trust is going to be replaced by a protocol. It's a very bizarre kind of way of thinking about it. But if you think of payments, India is already the leader in that. And if you think of lending, that protocol is already out there. You can read about it. It's called Open. And there are open house sessions on our YouTube channel. And if you want to see this happening for trust, that is what Badal is about. And that is what is going to come into India later this year, early next year. So India is further ahead than anybody else in making this happen. But the same people who would rather do what open banking of UK is and not what India is saying will always listen to what that thing is. So our thing is that's okay, because why is it okay? Because to create facts on the ground, we need the early converts. And the best way to find early converts is not to talk about these things very much. Because when you don't talk about them very much, you don't do a gaga thing about this, right? Then what happens is the people who discover it and find conviction in it, there's a self-selection at work. So you get 9 out of the 10 smart people who are going to work on this. You miss out one. If you do a lot of gaga, then you have the chance of getting that 10th. But you will have to deal with 90 other people who are basically, fluff, right? Yes, they are coming in because they chase every mainstream idea. And so sometimes we ask people when we are thinking about volunteers, which is a famous popular movie that you have not watched?
Nice question.
Right? And if you watched all of them, don't bother my spirit volunteering. You're not a misfit, right? So, do you have the gumption to not watch a popular movie? For me, that is Sholay. I've not watched Sholay till now. And so the point is, you in this new world of rapid change, you have to get early signals of what change to bet on, and make your own personal investment on it and bring it to life, and that is the way for people to be able to move forward. That's true for
Lovely,
individuals.
Sharad. I know we're almost at the end of time, so I'm just going to ask you, what would be advice you would give people who are just starting off their career in the banking world, young people who perhaps are close to graduating business school or have recently graduated and are interested in making a career in banking and financial services? Is there some advice you'd like to give them?
Self learning, everything that you want to learn, it will be learned by you. Don't look for learning in a organizational context. And uh, and we end our meetings by often focusing on unlearning, because learning is easy if unlearning is systematized. This is so our suggestion to iSpirit volunteers is every week find something to unlearn, because this is not going to be true. You're going to retire it from your mental map of this being important as you go forward. So I don't, the counterintuitive thing that we've come across is systematize unlearning. Learning will take care of itself. And if you can follow that paradigm, I think you will be suited for the modern world that we have entered. And then you will find a way to be innovator. This is going to be the rise of innovators. We used to say this is the world of investors, and then it became the world of operators. This is now going to be the world of innovators. So investors will give way to operators, operators will give way to innovators. And to be an innovator, you must attach yourself. You must unlearn faster than your peers. And if you can unlearn faster than your peers, you will learn faster than them. So,
I just love that, Sharad. I love that. I mean, great parting advice, systematic unlearning.
yes.
And unlearning opens the path for fresh learning.
Thank
Thank
you so
you.
much for having me.
Thank you. Thank you, Sharad. I hope all of you enjoyed the show. This show is going to be live. It'll be available on our website for all times to come. So if you'd like to share a recording of this with any of your friends and colleagues who might be interested, you can share both the LinkedIn live link as well as the YouTube link. With that, we come to an end of our conversation today. Thank you very much for joining us and stay tuned for the next Future of Work show. Thanks. Bye for now.